What happens when a giant stumbles? Does it shake the earth beneath it? In the case of China's property market, this isn't a metaphorical question. In the grand scheme of China's economy, the property market plays a colossal role, accounting for a whopping 1/3 of the country's economic activity. Enter Country Garden, one of China's largest property developers, a titan in its field. But even titans can wobble, and wobble it did, reporting a record loss of $6.7 billion in the first half of the year alone. The tremors are being felt far and wide, as the giant missed interest payments and teeters on the edge of a potential default on its debts. A question arises: how did this behemoth find itself in such a precarious situation? To understand the present, we need to delve into the past. Let's take a journey into the chronicles of the property market crisis in China. Every crisis has a backstory, and Country Garden's debt crisis is no exception. To understand the roots of this financial turmoil, we must rewind to 2020. This was the year when China introduced new borrowing regulations, a move that would inadvertently set the stage for the current crisis. These regulations were designed to curb excessive borrowing by property developers. However, they also introduced a series of obstacles that proved insurmountable for many. The result? Defaults and unfinished building projects started to pile up, a grim testament to the challenging environment. Country Garden, one of China's largest property developers, was not immune to these changes. Despite its size and influence, the company found itself caught in the crosshairs of these new regulations. The pressure started to build, and cracks began to appear in its financial facade. The first half of 2023 was particularly brutal. Country Garden reported a record loss of $6.7 billion, a staggering figure, one that sent shockwaves through the financial world. The company missed interest payments on its bonds, and even warned of potential default on its debts. The giant, it seemed, was teetering on the brink. But the effects of this crisis were not confined to Country Garden alone. The shockwaves rippled outwards, affecting the entire Chinese property market. This sector, which accounts for 1/3 of China's economy, was suddenly in jeopardy. The situation was further exacerbated by other economic challenges. China was grappling with weak growth, high local government debt, and rising youth unemployment. The property market crisis was an unwelcome addition to an already long list of problems. Adding to the woes, Country Garden's bonds experienced their worst performance on record in January 2022. The company's share price dropped 8% in Hong Kong, and traditional borrowing markets remained closed to it. The World Bank warned that a severe and prolonged downturn in China's real estate sector would have significant economic consequences. The situation reached a head in August 2023 when Country Garden missed interest payments on 2 US dollar-denominated bonds. This placed the company at risk of default and sent a clear warning signal for the Chinese real estate sector and the wider economy. As the dominoes began to fall, the tremors were felt not just within Country Garden, but across China's property market. The aftershocks of this crisis are still being felt, and the full extent of its impact remains to be seen. The ripple effects of Country Garden's debt crisis are far-reaching, extending beyond the company's walls. This is not just about one company's struggle, this is about a ripple effect that is shaking the very foundation of China's property market and the wider economy. As one of the country's largest property developers, Country Garden's financial woes are a symptom of a much larger issue plaguing the Chinese property market. The implications of this crisis are far-reaching and deep. The tremors from Country Garden's instability are already being felt by other developers who are also facing a liquidity squeeze. This squeeze is a result of regulatory restrictions on borrowing, which were implemented in response to the over-leveraged state of the market. These restrictions have led to further debt defaults and credit rating downgrades, exacerbating the crisis. The repercussions of this crisis extend beyond the property market. The Chinese economy is facing other serious challenges, including weak growth, high local government debt, and youth unemployment. With the property market accounting for 1/3 of China's economy, the struggles of developers like Country Garden and Evergrande are not isolated events, but rather signals of a potential economic downturn. This downturn could have far-reaching effects. It's not just about the investors who are losing money, or the companies facing bankruptcy. It's about the thousands of people who are employed by these companies, and the millions of people who live in homes built by these developers. It's about the local governments that rely on land sales for revenue, and the banks that have lent money to these developers. It's about the entire ecosystem built around the property market. The domino effect of Country Garden's debt crisis is a stark reminder of how interconnected the global economy is and how a crisis in one sector can spill over into others. As the property market in China continues to falter, the ripple effects are being felt far and wide, affecting not just the economy, but also the lives of everyday people. One thing is clear: the fall of a giant like Country Garden sends shockwaves through the entire economy. In the face of a crisis, the road ahead is often filled with uncertainty. As we look forward, the implications of Country Garden's debt crisis loom large. The concern is real. A severe and prolonged downturn in China's real estate sector, which forms about a third of the country's GDP, could have significant economic consequences. It's not just about one company's survival, it's about the health of an entire industry, and indeed, an entire economy. Let's consider Country Garden's recovery strategies. The company could seek to renegotiate its debts, reduce its spending, and focus on completing its existing projects. Such actions might help it to regain investor confidence and stabilize its financial situation. However, these are not quick fixes. They require time, discipline, and the cooperation of stakeholders, including creditors and investors. Yet the challenge is not just for Country Garden. The entire Chinese property market needs to find a way forward. This could involve a combination of strategies, such as encouraging responsible borrowing, enforcing stricter regulations on property developers, and promoting sustainable growth in the sector. The government's role in managing this crisis and preventing future ones cannot be overstated. Moreover, this crisis could be a wake-up call for other property developers and the wider industry. It highlights the risks of over-reliance on debt and the importance of sound financial management. It could drive a shift towards more sustainable business models in the real estate sector, both in China and globally. However, the road to recovery will not be a smooth one. There will be obstacles and setbacks, but with the right strategies and a commitment to change, it is possible to navigate through this crisis. As the dust settles on this crisis, the landscape of China's property market may never look the same again. The lessons learned from Country Garden's debt crisis could shape the future of the industry, influencing how companies operate and how governments regulate. It's a moment of reckoning, a time for reflection, and most importantly, an opportunity for change. The way forward may be uncertain, but it's also a chance to build a stronger, more resilient property market.